Making money in stressed capital markets situation is tough. A typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address US $39 trillion in debt, contradictory fiscal and monetary policies, internal conflict, and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Today, Ian is here from Severa Capital with their latest press release. Ian, what's on the agenda for today?
Hi, Don. More of the same is the story, I think. Markets are bored. We're going to go back to where we were before in our thinking.
Right.
And yeah, basically, when we look at the charts, we'll see a pretty similar pattern apart from equities, which we'll talk about later.
So when you say more of the same, what are those sorts of things that we need to sort of think about? What are the markets doing? What sorts of things are you seeing?
Yeah, so we've seen obviously 4 years of war with Russia and Ukraine, and now we're seeing a war in Iran that doesn't seem to have a conclusion. Although Trump wants one every 2 seconds, I think the Iranians are locked in for a long battle. And you know, the war, what do they say about Hitler? He lost because he tried to fight a war on two fronts. So here we have a war on two fronts economically for the world. We have to price in higher oil prices, which the market has already done. And what does that mean? That means some set of people will say that's inflationary. I say it's deflationary because it's not demand driven. But it does mean prices go up. It does mean companies have to, you know, not maybe invest so much in the future or spend so much on marketing and whatever it is they need to do. Margins are getting squeezed, and you know what happens there.
And so what's that doing to the market itself? So that would say to me companies are not wanting to spend money. That obviously has its own impact as a result.
Yeah, so stock markets are moving higher because they anticipate that when Kevin Walsh comes into the Fed, assuming all of those things happen, the nomination, etc., he's going to cut rates quickly because the economy is not so good. Whether that's Trump forcing him to do it or whatever, he's going to have to do it for the economy. And so stock markets like that, and they like to price that in before it happens, so that when it happens, the price is already there.
Right. And does it have implications for countries doing trade with each other? I mean, war quite often has that impact.
Yeah, so some countries have already asked for dollar swap lines where the US will sell them some US dollars for their currency and do a reverse transaction in 2 weeks, 6 months, a year, whatever it is, so that dollar liquidity doesn't dry up. So particularly foreign banks need to fund foreign loans. So you know, a bank in Europe might lend money to American dollars to another bank in Europe, so they've got to cover that loan. And when dollar liquidity dries up, normally everything goes wrong very quickly. So those swap lines are in place and have been in place for ages and ages to help foreign central banks deliver dollars to people that need it abroad.
So as you led into this press release, more of the same, meaning credit lines are more of the same, given they're historically been there for some time.
Yeah, exactly right. So, you know, if more dollars are needed, it's there. It's the Treasury that decides it, but the Fed, obviously, as the bank, has to execute it. And it's just what happens. But more of the same is really about the economies of the world, and you know, I wouldn't say they're contracting, but no one's expanding. US is down to 0.5% GDP. You know, next is deflationary forces.
Yeah. No one's wanting to, as you said, stick their neck out, spend some money, get some growth going because they're really unsure. And you talk about, you know, the Iranian war, but you also mentioned the Ukrainian war. So 2 wars going on, and no end in sight.
That's right. And all we know from war from the last 5,000 years is it destroys economies. And the
Mm.
longer it goes on, the worse it is.
And correct me if I'm wrong, the swap credit lines was something that occurred during the GFC?
Pretty much they've always been there anyway, if not in name. I mean, I can
Yep.
remember back in the day dealing with Bank of Canada and whatever. So there's no doubt that that is long been in place, and
Mm,
it's
mm.
just part of the procedure.
Okay. Anything else on this week's press release before we move to the charts?
Well, it's a big week for central banks. So the FOMC on Wednesday,
Yep.
Bank of Japan, Bank of England. So not expecting too much, particularly ahead of the Senate Banking Committee supposedly going to confirm Kevin Warsh as the new governor of the Federal Reserve. So they won't be wanting to do anything, I doubt. Even Mr. Powell won't be wanting to do anything. So we have to see really if Warsh is confirmed. That's a really big
Yep.
thing. And if
Yep.
he is he going to join immediately? I can only assume he is, but he may not. So we have to watch that. Otherwise, I'm not expecting any changes at all. More of the same.
Okay. Let's go through those charts then.
All righty. So give me 1 second. Here we go. Let me know if you can see it.
Yes, I can. Thank you.
Awesome. So going through our usual charts, we can see here Bitcoin not looking too bad, but it's been pretty dull price action. You know, we expect Bitcoin up 5%, down 10%, that sort of thing, but it's grinding higher.
Yep.
Same can be said with the other crypto. This is Ethereum. And yeah, plenty of sideways action, as you can see already. Brent crude is, well, it's not going down yet, is it? So
No.
but you could say if you took the current price level and said, well, that's pretty much the average price where it's been since the war started. You know, are we settling down for 100 plus oil, you know, for 6 months? That's what the market has to think.
Yep. And
Silver,
going back to your earlier comments, sorry,
yeah,
in your release about tightening, belts and all those sorts of things, that sort of time frame really is not a great message to the market, is it?
it's not. And also, you know, if it's going to be 6 months, why can't it be a year? If it can be a year, why not 2 years? And, you know, maybe
Yeah.
it's 4 years, like the Ukraine war hasn't finished in 4 years.
Yep.
So
Yep.
markets hate uncertainty, and, you know, people
Yep.
just stop taking risk. And that's what we're seeing already. This is silver, which is really doing very little. Gold, the same, you know, not much price action there. Dollar, this is the Dixie, the futures. It's kind of settling in at the base level that we've seen for the last 10 to 15 years. So not much happening
Yep.
there. Rates are ticking a little bit higher, if anything. But there's lots of mechanics going on, how the US funds its debt and stuff like that. So this can be more mechanically driven rather than having to, you know, rely on sentiment. But as we saw last week, obviously we're in a time where this is still the Friday session from America.
Sure.
You know, markets are buoyant on belief that cheap money's coming. It's quite a common theory. But, you know, they're reaching their all-time highs or above their all-time highs. You know, does that mean they're going to go down? Well, nothing we've seen has pushed them down. We've had a 10% correction. This is the BIST, actually. Let's get the... Give me a sec. There we go. There's the NASDAQ. So we've had a good 10% correction only after, you know, all of the talk and the hype of a top in, and they're straight back up again. It's hard to say it's going down, really. Lots of people, lots of technicians thinking it's going down. It's hard to say it's going down when it has that price action. You know, you just want to get in the trend and see where it goes. You don't want to start getting clever trying to pick the top of the all-time high. So that's really the only bit of the price action, to be honest.
Sure. Okay.
Yep. Sorry.
No, that's okay. I wasn't sure whether we had another chart coming up or not.
No.
So, Daisy said more of the same, and everything's looking the same. So, nothing's really changed week on week except for a couple of key indices there.
Yeah, that's right. Pretty quiet economic releases. Obviously, who knows what happened in the White House during that dinner the other night, but it's not, things like that aren't world shattering news anymore that they would have been a year ago.
Exactly.
The world is weary of all this continual nonsense. So markets have to price risk, and the risks they're pricing in is that oil is going to be higher in price, and economies are going to slow down.
Okay, very good. Anything else before we wrap up? It's a bit of a short podcast this week, by the sounds of it.
Yeah, no, we're looking for a real movement, i.e., an actual ceasefire or an end of the war, one of two wars. We need to see actual movement, and we're not seeing that at the moment. So
you would suggest even if one of the wars stopped, that we would see improvement?
I think we'd see a different price action, that's for sure. So what that price action is rather depends how a war ends. So a Russian victory would be completely different outcome than a Ukrainian victory. But
of course,
I mean, I think everyone knows that there is not going to be a victory. It will just last forever, and at some point, two sides retreat a little bit physically, and whoever's got some land has it for the foreseeable future, I'm guessing.
Yep, it's almost like a stalemate and just walk away. Yep,
that's right.
Okay. Whereas the conclusion of the Iranian war, I would suspect, have a bigger impact given the oil crisis.
Yeah, it would. I mean, obviously the price of oil will plunge. Does it mean it's going to stay low? Well, the price of oil is always manipulated to where people can make money on it, unless there's extreme circumstances. So it will go back down to $60, $70, whatever, and we start again. But the only real effect of both wars is that the global economy is getting weaker. The US is still
absolutely
bankrupt,
which isn't,
or more bankrupt, or going more bankrupt every day. It's a big distraction. Still got to deal with the big issues.
Yep, exactly right. Excellent. Well, if that's it, we might wrap up again for this week. As I said, that's another wrap for this week of Limit Up Podcast. This and previous podcasts can be located on the Siberia Capital website. Alternatively, you can subscribe by accessing the link at www.siberia.capital/contact. Thanks again for this week's analysis, Ian.
Thanks, Don. Good to see you.
You too. Thank you.